Hey everybody, this is Richard. I'm going to be doing a product demo on the Phoenix algorithm. We're going to be looking at the tear sheet, its strengths and weaknesses, and then the algos traded, and we'll be looking at some charts as well. So before we get started, feel free to pause this slide. This is just the standard risk disclosure. Trading futures is not for everyone. It involves substantial risk of loss. So take that into account as you're evaluating what we do. All right, so the Phoenix algorithm is the fifth algorithm that we've offered in the last roughly 4 years. This algorithm was launched after the pandemic. It began trading live in 2021. It trades three algorithms: the Momentum TY, the Momentum ES, and the ES Phoenix Day Trade Long. Now the Momentum ES version that it trades though is a V2, and what it does is it adds a 50-point overnight stop, and then it does what it can to reduce over the weekend risk. This algorithm though has what looks like to be the highest returns of any of the algorithms we offer, and it also has a decent drawdown, a fairly high win rate, and it does trade three algorithms, so it's kind of in the middle of some of the other ones. The unit size is $20,000, so that means for every 20K in the account, you could trade one unit. The last thing I'll mention is it does have the shortest live trade history of any of the algos we offer. Like I said, it recently began live. But as you evaluate it, though, keep in mind that the Momentum TY is the same algorithm that we trade in the other packages, so it's actually been live for over 4 years. The Momentum ES was last optimized in March of 2020. So for the last year, it's had a decent amount of walk forward kind of live, not live, but walk forward returns, which are a little bit better than the back tested, but of course not as good as live. The ES Phoenix Day Trade Long, that's the newest algorithm that we have, and that is a new algo. However, it is based on the existing Day Trade Long algo that we have. All right, so let's look at the returns. So in essence, the Phoenix algorithm on a back-tested basis, this just shows how much the algorithm returned per year. This is per 20,000 traded. So for example, I've highlighted 2008, the financial crisis. This algorithm in the back test returned $17,000 per 20K that was traded. So it almost had a 100% return. In fact, on initial equity of 20K, it's about an 86% return. But this table also shows the profit factor per year, the number of trades per year, and then the profitable trade rate as well for each year. To the right of that, you do have an equity curve, and this is just a standard way that developers will show the potential profitability of an algorithm. And so it just shows if the algorithm began trading way back in 03, what the profit would have been kind of trade by trade. And so this also shows it's had about 2,500 trades in the back test. Now, since it's back-tested data, though, keep in mind the CFTC Rule 4.41 that I have listed here. All right, so the other thing that I want to show you as it pertains to the Phoenix algorithm is that the profit factor is actually pretty high. It's 1.383. That's actually really good. Anything above 1.25 typically is pretty good. And if it gets higher than 2.0, typically that suggests that an algorithm might be just curve fitted. So there's a kind of really sweet spot that you want to hit, and somewhere in between 1.25 and 2.0, we're at 1.383, so that's great. It has a total number of trades at 2,624, which is great. We always look to have at least 300. The trading period, it's back tested between 03 and 2021, so there's no avoiding the 08 period or even the early 2000s. And then of course it's also tested through the pandemic. Initial capital is $20,000, so that's the unit trade size. Average monthly return tends to be about 4.89%. Now remember, that's an average of all the months. So that doesn't mean that every month it returns that. It's more that if you average out the months over time, that's the longer term average. So there are winning months, there are losing months, and when you average them all out, it's about 4.89%, and that's on the 20K unit size, which is about $978 per month. If you have any questions on this, feel free to email us at sales@AlgorithmicTrading.net, and I can send you the latest performance report for the Phoenix algorithm. So now we're going to look, though, at a few other charts, the kind of each algorithm that's traded. Remember, if I go back up here, I mentioned that there's three algos that are traded in Phoenix, and we have them listed here as kind of the puzzle pieces, which is a common way that we show that data. But the momentum ESV2, that's this algorithm right here. And what this one does is it's similar to the original momentum ES, only it does have an overnight stop of 50 points, and then it does what it can to avoid the weekend trades. But it trades the S&P. It's an algorithm, so it's coded and traded as it is. There's no human discretion involved. And it tends to do well in strong up moving markets and sideways moving markets, which occur about a third of the time are the strong up and about 32% are the sideways. Let's look now at the momentum TY. Its hero states are when the market is going lower or sideways. And so again, if you're familiar with the way that we trade, we tend to take different algorithms that perform well in different market conditions, sideways, up or down, and then we kind of put them together to create a package. And that's really what we're doing here. So the momentum TY, what it does for us is it gives us good performance during strong down moving markets, which also occur about a third of the time, as we've defined it as the S&P closing down 4 points or more for any given month. But this also has a hero state of a sideways moving market. So it makes it so that there's a little bit of overlap where this algorithm will tend to do good when the market's going higher, and when it goes sideways, it'll also do well. The 10-year note algorithm will do well when the market rolls over and goes lower, and then also in these sideways conditions. So the key to these algorithms is not to win in every state, but to identify the hero states where this algorithm will do well, and then try not to lose a lot in the kind of villain state. So in this case, that would be the strong up. But the final algorithm that we added to the Phoenix system is the Phoenix Day Trade Long. This is a brand new algorithm. It is based on the original day trade that we have, but it tends to do really well in these strongward up moving markets. I don't have it listed here, but it also does pretty well in sideways moving markets. And even down moving markets, this algorithm can outperform primarily because of the short covering rallies. But it is a day trade, so it's in and out the same day. And it looks to take advantage of inefficiencies that exist on a short-term basis in the market. The nice thing about this algorithm, this third one, is it's a day trade, so we don't hold the S&P overnight with this one. That's a real brief summary, though, of the Phoenix algorithm. I think that it's a great system. It's still relatively new. It began trading live at the end of February 2021. It is the first product we've offered since the pandemic, and so it does take into account some of the things that we learned throughout the pandemic. But it looks to be a great algorithm. It is back tested, but when you look under the hood, two of the algorithms are a combination of back tested plus sort of walk forward. So if you have questions on any of this, though, feel free to shoot us an email at sales@AlgorithmicTrading.net, and I'd be happy to walk you through any questions you have and even do a demo in person if you prefer. But that's really all I have. So would love to hear from you, and if this is something that you think would work for you. Again, these algorithms are traded under a letter of direction. They're fully automated, so everyone gets the same signal. We all see the same trade, in other words. And they get auto-executed by NFA brokers who are able to trade the algorithms on your account under a letter of direction. Thanks a lot, and look forward to hearing from you. Have a great day. Bye-bye.